It's about that time of day again. My name is Joseph. It's Thursday evening, July 27th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bullish and trying to retest June's high, but a spike in range pattern is telling us to focus on seller failures below the moving average down in the battle zone tomorrow. The S&P is bullish and trying to retest today's high, and we're using channel rotation combined with measured moves to identify the most reliable buying opportunities on Friday. Gold is bullish and trying to retest yesterday's high, and today's trading range is telling us to watch for traps and use a hidden channel setting up for tomorrow. Euro is bearish, but trading at two big levels of support, so we're looking for selling opportunities using a resistance trend line for a target back down to yesterday's low. And don't forget the FDAX. The DAX is bearish and still working its way down to Monday's low, but we're a little bit too low to sell at this point, so our focus is selling up in the battle zone on Friday morning. I got a great newsletter in store for you guys and gals tonight. We got a summertime Friday coming right around the corner. End of the week, end of the month. We're going to have some fireworks here in the next couple of days, and I can't wait to get my hands on this strategy for tomorrow. Before we jump into the charts, don't forget, the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link in the description of the YouTube video and come join me here on the blog for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening. The nightly newsletter goes live. Follow me on social. Lower left-hand corner, stock towards Twitter, Facebook, LinkedIn, whatever your flavor of choice. Follow me throughout the week for important charts, links, and updates. And please don't forget, grab those charts. You guys always tell me this is your favorite part about our nightly newsletter is the fact that you can have all of my charts from tonight's video on your computer for tomorrow. Follow that link to download the charts below the video on the blog. And if you do one thing else besides watch this video tonight, make sure you grab that free pass. If you're not a member here at School of Trade, what are you waiting for? You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee that. Grab that free pass in the upper right-hand corner. And I know most websites are all automated robots these days, but I'm an old school guy myself. I believe in providing great customer service. If you got any questions, hit me up on live support. I look forward to answering the call anytime you guys need help along the way. Got a big day tomorrow. Let's crack this sucker open here and get ready for a summertime Friday. Now tomorrow, of course, Friday, July the 28th. We've been talking about this all week this week. We're going into the end of the week and the end of the month, and that is a recipe for volatility. Now remember, at the end of the day, at the end of the week, at the end of the month, we expect traders to take bigger risks. Traders who have lost money this week or this month will try to make up for it at the end of the week and the end of the month. Traders who made a lot of money this week or this month are going to be all loosey-goosey with their rules, right? Trading with house money, so to speak. So we always expect to see a little bit more risk tolerance, right? A little more risk acceptance as we go into the end of the week, and this happens to be the end of the week. It's not exactly the end of the month because we are going to have one day on Monday, right? But this all definitely falls into that category of end of the month. So what you want to be aware of for tomorrow, we got a bunch of news here tomorrow morning, right, which is great because we're going to need it to get this day going nice and early tomorrow for you guys. But the most important thing is on Friday mornings, early in, early out on a summer Friday, it's even more important. Anything after 11 o'clock Eastern time tomorrow, you better have a really good reason to put more risk on after 11 a.m. Eastern time. My cutoff on Fridays is always 11 a.m. for new positions. You're more than welcome to hold positions into the close on Friday. I wouldn't recommend holding over the weekend because, crazy things happen these days, right, with this 24-hour crazy Twitter news cycle. So we definitely expect to see, right, early in, early out tomorrow, 11 o'clock, start watching that time as we start getting closer to 11 o'clock, looking for the price action to start slowing down or possibly speeding up, right? Remember, again, we expect lower volume, but that also leads, right, to increased volatility as well. So early in, early out tomorrow. What do we have here on the schedule? Tomorrow, of course, being the 28th day of the month. We got some news coming out overnight, just after midnight. That probably won't have too big of an impact here for us tomorrow. It's not going to be until we get down to the 5 a.m. and then 8:30 a.m. time slots tomorrow that we'll start seeing the market move around to these news events. Tomorrow morning, 5 a.m., we'll hear from the economic numbers, right, from the ECB. And, of course, we get the GDP at 8:30 a.m. Eastern time right here in the U.S. Don't forget, we're going to be, again, early in, early out tomorrow. We're going to be opening up our trade room tomorrow morning, 8 o'clock Eastern time, as we do every morning, and we're going to execute this plan with all of our advanced members. I remind you, you don't need to do this alone. What are you waiting for? Come out and join me tomorrow morning as a brand new advanced member. Right, we'll talk more about that towards the end of tonight's video. In the meantime, you guys are busy people, probably just as busy as I am. Let's jump right in. We got crude, S&P, gold, euro, and we'll wrap up with the FDAX tonight. Crude is bullish and trying to retest the prior month high before we finish the month of July. And we're using a bull wedge in combination with a spike in range to tell us where to find the most reliable buying opportunities on Friday. Now, the bull wedge tells us to look for buying opportunities using rotation from the low back up to the high, and that spike in range tells us to look for traps and seller failures below the moving average, below the range, preferably down in the battle zone tomorrow. The first thing that stands out on this chart tonight is this prior month high. We always talk about this at the end of the week. We start watching prior week levels. At the end of the month, we start watching prior month levels. There aren't any prior week levels to worry about here right now, but that prior month level at 49.59 has to be a big target for those buyers right now. The hard part is we have a little bit of problem pushing higher, right? Top of that wedge coming in overhead. And of course, we have what is called a bull wedge. Now, a bull wedge is really, really simple. Buy low, sell high, right, and focus on really getting that market down nice and deep, right? Look for traps, look for failures, in this case, right down around that battle zone. So the bottom line is two real opportunities here to be trading that wedge, buying off the low of the wedge, and also buying with failures below the low of the wedge, right? Those are two easy opportunities to use that wedge tomorrow, right? Two easy opportunities to use the wedge tomorrow, buying below at the low of the wedge or buying just below the low of that wedge using failures. What else do we know here on this chart tonight? Well, we have a spike into a range, right? We call this a spike and range. Nice rotation back and forth. Now, what does a range tell me? Well, first of all, there's a bull bias to it, so I know I want to be a buyer, not a seller. Second of all, the most reliable way to trade a range is to look for traps and failures down below the low of that range, right? So think about getting below that range. Look left, right? Look at that swing at 88. Try to use that 88 as a trap low, as a seller failure to buy it back up. Now, here's always a big challenge. What if the market goes higher? What if we don't pull back, right? What if it goes higher? Well, if it goes higher, we have to resist the temptation to want to buy the breakout. Now, breakouts might work in illiquid little penny stocks, right, or CFDs, but for liquid markets, like most futures markets, right, there's a buyer for every seller. You're not just trading with your broker, right? In those environments, we can't trade breakouts because they're not reliable. They haven't been reliable since, I think, the invention of the interwebs, right? So way too liquid, not a good breakout environment. So we don't want to buy, we don't want to buy that breakout. What I like to do is I like to, whenever I have a breakout higher, I like to look for two things. Well, three things, I guess. One would be a strong break higher. Two, get the moving average up above the top of that range. And three, look for a two-legged pullback for a trap low. So that would be what you're looking for, right, if the market decides it wants to push higher. You'll also notice that we have a measured move looking at us, right, as resistance here, right? The measured move overhead, that'll be resistance. The prior month high, that'll be resistance. So in all reality, I really should kind of call this a no trade zone up here, right? Make this a red color here for you guys, right? So we know to be very careful being a buyer up here. So what I want you guys to do is if the market doesn't pull back and give us a chance to buy low, make sure you promise me you're not going to take the bait chasing the move higher, up, trap low, and go. Oftentimes, when we have a major objective like a measured move or a prior month high, it may just run right up turn into a trading range, and that will tell you again, right, trap low and buy from there. If you watch my newsletter religiously every evening, you know that anytime I'm in a situation where the only option is to buy low or sell high, I always like to look for traps, and that is going to be the same for tomorrow morning. How do we turn bearish, right? Give you guys some pretty good ideas there for being a buyer tomorrow. How do we turn bearish tomorrow? It's a bull market, and so anything that pulls back here will likely be seen as a buying opportunity. How do we turn bearish? Two things: strength, and then hold a pullback. Strength, and then hold a pullback. If we can hold a pullback tomorrow, remember, it's not enough to get a strong move down. Has to hold that pullback. I like to watch it around the moving average. If they hold the pullback, then of course, right, we are watching for a retest of that 48.25. 48.25. What else was down here? Wasn't something else back here? I thought there was something else we had, and it must be a different chart here. Yeah, it was today's low. That's what it was. I'm off my game here tonight for you guys, right? So objective, right, will be down at that. Again, if the sellers can take control here, right, bears take control, two targets on the way down, right? You've got the 48.25, today's low, and again, yesterday's low down there at 47.86. Those will be our targets. Again, make sure though you first see, right? Make sure you first see those sellers take control, strong move down, hold that pullback, and then we can go out and start looking for our own bear channel, right, our own measured moves. We can focus on selling at that point, right, back down, again, to today's low and yesterday's low. So watching that prior month high, buy those dips. Don't buy high. Be careful about chasing after these moves higher, right? And again, plan your trades and trade your plan. We'll be trading that stuff tomorrow morning in our trade room. How about some S&P? S&P is bullish and trying to retest today's high, and we're using a bull channel and a measured move to tell us where the most reliable buying opportunities will be here tomorrow. The bull channel tells us to use rotation to buy the low of the channel and take profit up at the high of that channel, while this measured move can be used as either support, right, above, or resistance below, which we can use as the market either pulls back, right, or tries to push higher. What a great chart here on the S&P. As I look at the chart, you can see there's that prior month high. We talked about that earlier. As we go closer and closer to those to the end of this month, we start watching the end of last month's levels, right? That prior month high at 51.50 will definitely be a magnet for those bears if they can take control tomorrow. Right now, though, very big clue is the original trading range. If you recall, we talked about this from last night's newsletter, right? This is one big trading range. We're talking about buying that dip and going back up to that trading range today. So we're all playing out what we've been talking about all week on the S&P, right? Buy below the low of that trading range. If you've watched this newsletter this week, right, you know exactly what I'm talking about. So that trading range is definitely going to be our big magnet right now. And with that big magnet, we've got some measured moves to use. 1, 2, and then 3, right? So that measured move, we got a couple measured moves to watch out for. 71.25 and then 78.75, depending on, right, how far this thing pulls back right now. I think the most important clue here is going to be the trading range as the magnet, right, to draw that price back up to where it came from. And then, of course, the channel. Now, this channel really could be drawn in a few different ways. Bottom line is, anytime we have a bull channel, it tells me two things. 1, look to buy the low of the channel. And 2, look for a nice deep pullback below the low of that channel, looking for traps, looking for seller failures below the moving average, and then back up we go from there. So here are 2 examples, right, of areas where we are watching for buying opportunities tomorrow. Now, how do we know which one to use? Well, that's where our measured move comes in. The measured move makes it very easy to see that we have some significant resistance here at 71.25. So trying to buy right into that measured move, probably not going to be a very good strategy. What I'd rather do here for tomorrow is I'd rather look for, and again, I talked about this briefly before, anytime I find myself in a position where the only option is to buy high, right? When I say buy high, really what I'm talking about is buying into a major level of resistance, such as the top of a channel, the top of a range, a measured move. I call these all market objectives, and you'll learn more about market objectives inside of our intermediate class. Now, with that said, We know we have some resistance here at the measured move. So that really makes this battle zone real important for us here tomorrow. We love to get the price. Nice deep pull back down. Sellers try once, try twice, and fail. The one thing you want to be aware of at that point, there will be some falling resistance here. I know I've covered a lot this week on the newsletter. I hope you guys learned something and hope you're using it to earn something here this week with me. If you got some feedback for me, I always love your feedback. You can email me directly, jj@schooloftrade.com, or you can drop me an email, right? You can post a comment on my blog or on my YouTube channel. Speaking of YouTube, if you're watching the video right now on our YouTube channel, this is only a small snippet on the YouTube channel. Not to worry, there's a link in the description of that YouTube video. Follow that link either over to the blog for the full-length version or over here to the website at schooloftrade.com. And while I have a couple more minutes of your attention, I know how important it is, right, to give you guys time here. I want to make sure to remind you guys, if you want to learn more about our levels of membership, if you want to learn more about the strategies that we use here at School of Trade, if you want to learn more about what it means to be a client, make sure you join that free trial. You'll learn all about the analysis techniques, the patterns we use, and what it feels like to be with me every day in our trade room. I've taken up enough time of you guys tonight. Thank you so much for being here. My name is Joseph. I'll be with our clients tomorrow morning in the trade room, 8 o'clock Eastern time. You can learn more about that on our website. If I don't see you guys tomorrow morning, don't forget, early in, early out for our Summertime Friday. Have a wonderful, wonderful weekend. Only a couple more summertime weekends, so enjoy it. I'll be back here next Monday evening on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? Have fun this weekend. Adios, amigos. Bye-bye for now.